Well, good morning, everyone, and welcome to the Friday morning pre-market rundown with TriggerCharts. I'm your host, Kevin Hoffman. I'll be with you for the next 25 minutes to a half hour or so. I'm also a co-founder of the TriggerCharts Smart Chart Indicators for serious traders. Andrew is out of the office today, but he'll be back with you next week. This will be the last pre-market rundown that we've had for the last decade. So wishing everybody a Merry Christmas, Happy Hanukkah, and to a very prosperous new year. Now, before we get into everything, let's go over the important disclosures. Investing involves substantial risk. Past performance is not a guarantee of future results, and a loss of original capital may occur. No one receiving or accessing this information should make any investment decision without first consulting his or her own personal financial advisor and conducting his or her own research and due diligence. Please consider this for educational purposes only. And as always, use your best judgment when investing. I'd like to welcome everybody here this Friday morning. A little bit of a Christmas hangover, I'd say. But markets are looking pretty good over the last couple of days. I think you're going to see markets continue to move higher into the end of the new year, with most people wanting to print the tape much, much higher. If we take a look at kind of markets this morning, we have the E-mini S&Ps up about 21 basis points, NASDAQ's up about 36 to 40 basis points. Only real drawdowns here that we're seeing so far are in the commodity space, looking at some of the gold, silver, but oil is moving higher slightly as well. Emerging markets are doing well. Bonds are doing well. So seeing a lot of a push forward or push up here in the markets toward the end of the year. And yeah, it's going to be an interesting new year next year. And as we take a look at some of these things, we're going to take a look today, since there's not very much news flow happening with the short week. And just want to warn everyone, try and stay a little bit on the lower end of your position sizing, as volume is very low. And volatility, could be quite rampant if there's not a lot of participation in the markets. So, with that being said, let's kind of get into what we were talking about today. And as always, guys, if you can, put some symbols in the chat here, since there wasn't a whole lot of news flow this last week and going into next week. Next week is a short week as well, with the New Year's holiday coming up. So, if there's any particular symbols you want me to take a look at for you guys and do a quick analyzation of them, put them in the chat, and we'll go over them together. But first, let's take a look at some of the booms and busts of the last year. First of all, I don't know if anybody ever remembers this whole 3D printing boom that happened. This is probably more of a decade bust rather than the last year, but 3D printing was one of those things, I guess I want to say back in 2014, 15, 16, that was going to be the next new rage. But if we take a look, some of the symbols that house these, 3D Systems was one of the big ones. If you take a look, we're looking at a weekly chart here. And as you can see, over the past year, really hasn't done much. But if we take a look back over the last decade, we've seen a price go from $95 all the way down to $8.97. So quite the drawdown on the Triple D or the 3D Systems, where everybody really piled into that company back in 2013 and 14 and haven't seen anything come of it since. So I'm not sure if this is one of those stocks that we're going to see a rebound in the next year or so, but it doesn't seem like 3D printing is making its way into households. It's more of an industrial type play and a play for corporations, but it still hasn't had a lot of adaptation. Another one in the space was Stratasys. They've done over the last year a little bit better than 3D Systems, still not great, but as you'll see, you're talking about a a high flyer back in 14 at $135 stock, now way down to about $20. So that was one of the big busts of the decade. Let's talk about another bust. Bitcoin, cryptocurrencies still have yet to kind of take hold as everybody's predicted, but hopefully we'll see some adaptation of this or adoption of this, going forward. But it's just the cryptocurrencies just seem like they're just not quite ready for the big day. If you look at Ethereum here, over the last 2 years, from 900 down to 124. So certainly, if you guys are into the cryptocurrency play, you're getting a big discount here from the past 2 years. Litecoin as well, still nothing great. So another big bust of the 2019, and these are kind of the themes that we're looking at that were very in vogue, we'll say. Another one is the cannabis plays. As you all know, Tilray made that big spike. I don't know if you guys ever played this stock or not, but that was a wild ride way back in October 2018, where it spiked up to, $300+, but has slowly kind of been on this downslope here. If we can take a look at this here. Nice little downslope all the way down to $16.55. So if you were in that stock, it was a good one for a little while, but certainly has not done well since. Let's see if I can clear this out now. There we go. Clear all drawings. All right, very good. Next one was Canopy Growth. Also has done a little bit better than Tilray. This is a Canadian company that's a grower, but with Canada legalizing all marijuana, recreational and everything, it seems like this one would have been the one to gain some of that traction, but still hasn't really done a whole lot of hasn't had a whole lot of movement for us. So I don't know if this is going to be something in 2020 it's going to finally take off, but we'll have to see. It doesn't seem like there's a whole lot of upside here in these companies. Kronos was the other one, another marijuana stock. Just seems like there's a lot of supply and the demand is still lacking. Certain states, I believe Illinois is one of those states that's going recreational beginning January 1st. So maybe we'll continue to see that trend of more and more states implementing the legalization of it, and maybe at one point in time we'll get the federal level to get on board. But it certainly seems like these stocks have been beaten up rather dramatically. Kronos is actually an interesting one here from a daily perspective. Let's take a look at this here. You have very good consolidation. You had it here in the previous altimeter, where you had some good consolidation here, and then it broke that consolidation, which would have been a good kind of sell point. You could have sold it here, or even on the yellow bar as you broke this massive consolidation area. And now we've got another good consolidation area here. So it'll be interesting to see where we go from here. Obviously, the affinity for this particular company will be, to go down, just based on the fact that you have this weekly pretty long downtrend here. Let's see if we can highlight that. Pretty long downtrend there. So I think you're going to see more probability to the downside than the upside. But if we break any of this consolidation here on the daily, either upside or downside, it could be a good opportunity to try and jump on board for a quick move. Let's see if we can turn the radar on. Let's see here. Does he have the radar? Let's see it. Study. It doesn't have it on this one. Oh, here we go. There we go. All right, so here we can kind of see the radar here, which is kind of a little bit confusing, but you see a lot of the high volume, this yellow line here, kind of shows where the stock's going to get drawn to. but you have a huge gap in volume above this altimeter level here. So any break above here, you should see it move up to about this 825 to 850 level. Any break below, I think you're going to see continued downside, similar to what's going on with the weekly. So let's clear all this. Let's get rid of the radar. That way we can see things a little bit better. All right, so that was another big bust. So kind of a boom and a bust here is this new meat that we're talking about here, this Beyond Meat. Opened up, IPO'd actually at $25, moved all the way up to $225, but has subsequently come down big time. So not sure what we're going to see with this particular company as well. Certainly everybody seems to be selling it off. I don't know if this is just a fad, this is going to be another tofu, or if this is going to be, you know, a real big deal. But there seems to be two big companies in this space, Beyond Burger, Impossible Meat. Impossible has not IPO'd yet, but certainly with Beyond Meat doing so well in the IPO and raising quite a bit of money, could see some additional expansion in this space. But if we take a look here at the daily, again, toward the end of the year, not a whole lot of action, so we are seeing a little bit of consolidation here. But I would think, you know, after this this fad of this particular manufactured meat, I think we're going to see further downside. But anything's possible. So let's move on. Next big bust, although it hasn't really felt it in the stock price, was Boeing 737 MAX throughout 2019. Their CEO was just fired, and have a new CEO coming on board, which is hopefully a good thing for them, but they're going to have to figure out a way to turn it around. As you can see on the weekly here, this is a long time here. We're talking about 2 years of consolidation, really. Let's see if we can highlight this. You kind of have this big consolidation area in between 370 to 360, and nothing's really gone anywhere. And I think mostly that's because of the fact that, you know, nobody's really sure what's going to happen. I mean, there's really only two big players in this space. There's Boeing and Airbus. And while Airbus is taking a lot of the action away from Boeing with their Airbus, Boeing certainly has the potential to come back. It's just a matter of when and how, and, you know, how much the lawsuits are going to be, and all that. So this one is going to really be news driven. But as you can see, the price action has stayed relatively consolidating. And that's mostly because nobody knows what's going on. Nobody knows what's going to happen. So there's this kind of price discovery phase where everybody kind of has this agreement on price anywhere between 375 down to about 320 or so. But it's just a matter of, you know, where's the next step? Is it going to be up or is it going to be down? And that's going to be one that we're going to want to watch going forward, especially throughout 2020. If they can get there, I don't think they're going to keep producing the 737 MAX, but if they're going to start off with something new or what they're going to do. But stay and watch the news on that one. It should be interesting. One other thing before we get into some of the booms that we were talking about, I want to take a look at some of the S&P levels and some of the other big market levels, because I think even though we're seeing a lot of movement up, as you can see here on this weekly here, you get a pretty large move higher from last couple of years, or the last couple of weeks. One thing that's kind of a warning here that we're seeing is that on the aileron here, we're starting to see some really overbought levels here. You have three kind of magentas in a row. And I think that may continue a little bit, like I said earlier, with them wanting to print some higher prices toward the end of the year, and what they call that, window shopping or sticker shock or whatever. But I think it's worth noting that, you know, when the new year comes, it may be worthwhile to scale back on risk here, because we've seen a rather large move up, and there still seems to be a lot of unknowns out there in the market. Certainly, the trade war got a little bit of help with the skinny deal that happened, but there's still a lot more to be done with that trade deal, as far as patent infringement and IP and everything. So I think you're gonna maybe see a little bit of weakness next year. A lot of the analysts that we've been talking to seem to think that next year is going to be a pretty low return year. Predictions are for somewhere between 7 and 9% on the S&P, with bonds producing somewhere between 4 and 6%. And some of the biggest, everybody keeps saying emerging markets is going to be the next thing. They said this in 2018. They said this in 2019. They're saying it again for 2020. They're predicting about a 12 to 14% return for emerging markets. So we'll have to watch that throughout the year, as emerging markets have lagged for the last, let's call it 2 to 4 years, compared to U.S. stocks. U.S. stocks have really been kind of the place to be. So let's move on from that. Now let's look at some of the booms here. Some of the booms mostly revolve around some of these chip makers. AMD kind of came back. They've got one of the best chips out there so far as performance goes. They've actually beat Intel for the first time in a long time. So seeing a rather large move here. This is a great chart here with it breaking out of this consolidation zone, but now we're kind of in no man's land. So this is a tough one to play, but especially with the 5G coming out soon, should be rather good for some of these chip stocks like AMD, Lam Research, KLA Tencor, all really great companies that performed very well over the last year. Some big moves here. We're talking about 80 and 90% type moves. Target was another one. They've kind of been able to switch a lot of their brick and mortar to a lot of e-commerce, which has been really big for them. Moving up here, 100% move here from 2019 all the way up to 128. Kind of starting to see some consolidation here on the daily after this big move up after earnings here. So I think you'll see this continue to consolidate for a little while until you get the next big thing. And I guess we'll see how their Christmas sales are beginning of next year. I think earnings start sometime mid-January. So when those start to come out, I think that'll be kind of the next catalyst of events here, mid-January for the earnings, whether or not we continue higher or if we move back lower. Another amazing boom for 2019, Chipotle Mexican Grill. I feel like everybody kind of really wrote this one off, especially after the E. coli scare that happened. I want to say that was 2016. Yeah, you can kind of see this E. coli scare here that happened back in 2016. You had this very large drop from 740 moved all the way back down here to 250. Now we're back up to 838. That's quite the move, I'd say, for Chipotle Mexican Grill. And then they were able to get a good PR team and continually to make good burritos. But what's up for 2020? We kind of touched on a little bit of that stuff in the beginning, but the Federal Reserve is still going to be in the limelight. They always will be, but it does seem like the probabilities for any kind of a rate hike or rate decline are basically zero. If you guys can see this here, this shows us kind of the fact that this is our current rate. We're in between 150 to 175 basis points. The probability for a rate hike is going to be very, very small. As you can see here, an increase of 25 basis points is only a 2% chance to a 1.2% chance, and that's all the way out to December of 2020. However, there is some small probability that we'll go down 25 basis points, or even an even smaller chance that we'll go down to 50 basis points, or down 50 basis points. But seems like the Federal Reserve may be a lot of rhetoric throughout 2020, and we'll see. Though it could be this could be the year that inflation happens, even though we always say that. This might be the year if we continue with low employment and low interest rates. Presidential election cycles coming up. Seems like anybody could win. Both sides, Democrats and Republicans, seem to be claiming a win already, but it's going to be a tough one. So everybody needs to get out and vote, depending on what side you're on, or if you're in the middle. But it's a good idea to get out there and vote. Ongoing trade war, like we talked about earlier, there's still going to be a lot of issues there. The one thing in 2020 that I kind of thought we might see coming is esports. I think you're going to see a lot more people, a lot more young people getting away from the NFL, getting away from the NBA, getting away from all these different outdoor sports, we'll call them, and more into esports. And some of those companies that we may see in esports, let's take a look at some of those. Of course, there's Electronic Arts. They've done, they're the big player in this space. I think there's 3 that are pretty big, which include Electronic Arts, Activision, Blizzard, and Take-Two Interactive. But as you can take a look here, EA Sports has not done well over the last couple of years, but you're starting to see a little move higher here on the weekly. It broke out from this consolidation here in the $100 to $80 range. So I think if we take a look at a radar here, this may help us kind of see where we're going. As you can see, there's not a whole lot of volume in this. Let's see here, wrong one. Not a whole lot of volume until you get up to this $118 level, which is why you're starting to see this price move quickly through time. But I think the next point of upside resistance will be around this 115 level. But one of the bigger players in that space, Activision Blizzard, another one. Certainly got a lot of room to the upside here on Activision Blizzard. You see it made a nice little bottoming process down here in the $45 range, and has subsequently moved up to this $58 to $60 range with not a whole lot of volume for it to have any kind of resistance here. You can see there's really nothing until we get up to around the $72 level. So I'd continue to think that this one will continue to move higher. We are seeing some overbought levels, but we're coming from a pretty low base here. Maybe developing a new trend up versus this short-term trend down here that was on the weekly. It's a slow mover, as you can see on the daily here, but certainly a lot of room for the upside. Take-Two Interactive, the other one in the space. Let's clear those drawings. This one really hasn't moved a whole lot. It could be, it's moved since 14-15, but certainly I continue to see esports being an interesting space throughout 2020, 2021. So yeah, another theme that I think we're gonna see change over the next year is value over growth. Let's take a look here. So some of these years, back from 98 to 99, we saw growth beat up on value by over 60%. Since 2017, we've seen growth beat up on value by over 42%. I think in the next year or two, we should see a reversal of that. We're going to start seeing some value take over from growth, in my personal opinion. As you can see, here's the different years. 2016, value did outpace growth by around 10% or so. But since then, 2017, 18, and 19, we've seen growth outpace value 3 years in a row. So I think we're going to see that kind of change as growth continues to kind of dwindle. People are going to start looking for some value stocks and see and kind of look for. I think growth is it's gone pretty far. So we'll see how it does in the next couple of days or in the next year or so. But you can take a look. Ones to look at there for that particular, or let's see, I think it's IWD which is the value play, and IWF are the growth plays. So you can kind of take a look at those two particular symbols and watch them throughout the next year or so. But I think we're going to see this IWD outpace the IWF going forward. So again, send us over some of your symbols if you want us to take a look at them, and we'll do that together. Another thing in 2020 that I think we're going to continue to see is cord cutting. I think you're going to see a lot of people still stick with their internet provider like Comcast or AT&T or whatever, but I think you're going to see more movement into on-demand TV like AT&T Now, YouTube TV, Hulu, Netflix, Amazon Prime. So I think these are some of those symbols you're going to want to continue to watch. Let's take a look at some of those, actually. So yeah, I think you see like AT&T had a really good move up here in the last couple of years, or last year or so. And I think a lot of that has to do with this AT&T Now product, and then also movement towards 5G networks. But very good move here for AT&T, 28 all the way up to 39. I think you're going to continue to see this higher. Right now in a daily, we're in a kind of consolidation pattern. But yeah, I think that's going to be a good one. Obviously, YouTube is owned by Google. So, but they've got a lot of ancillary businesses, so they may not get as much push up from people switching over to YouTube TV. Certainly, Netflix has done very well as far as content goes. Not necessarily from an equity play. Seeing a little bit of consolidation here, slight move down, but they've kind of gone pretty far, pretty fast. So we'll see how that one goes throughout 2020. But I think a lot of people are, like I said, are cord cutting and moving to programming that they like, rather than having to deal with 400 channels and paying rental fees for boxes and all sorts of things. So that's obviously Roku is another one that could potentially do well from this. The last year or so, they've done really quite well. So if you guys have any symbols, again, feel free to put them into the chat. Otherwise, we might. Let's see, what else do we have here? We have let's see, some of the econ. Let's see. As I said earlier, be careful of low volume and lack of liquidity this week. It's a short week for markets next week. Economic indicators were a little bit weak last week, despite the fact that new home sales came in at 1.3% versus negative 0.3%. A big shocker was this durable goods orders. Came in at negative 2% versus 1.5% of expectations. A lot of that had to do with transport equipment, which includes orders for airplanes. That was led, the decline, that 5.9% decline was led both by defense and civilian aircraft orders. I don't know if this is linked to the trade war. I think we're going to have to see what happens next month for durable goods, but it could be potentially the trade war issues and people holding off on purchases until they see what the tariffs were going to be. New home sales, like I said, a little bit better, but last month was really bad as far as new home sales went. So this may have just been kind of a rebound. Next week, not a whole lot as far as economics go, but we have pending home sales, ISM manufacturing, initial claims, and then you have the Case-Shiller home price index. So once again, thank you very much all for your time, and ask about the 4-hour online coaching program that we have. When you sign up for the TriggerCharts Commander Series, it's a free offer. Normally a $199 value that we're giving away for free with every new subscription. But glad to have you guys on, and have a happy new year, and we'll look forward to seeing you in 2020. Thank you very much.